Scott Kimball, what type of corporate bonds will be best in 2012?
The key is to identify companies who have used the low interest rate environment to bolster their financial positions and still exhibit conservative financial profiles and high cash flow.
One issue you like quite a bit is Transocean Rig. Now, this stock recently got hit over worries about BP liability. Why do you like the corporate bond?
Oftentimes when there's negative headlines around a company and you see a negative reaction in both bond prices and equity prices, you can uncover at very attractive valuations high quality assets that still over time will produce cash and service their debt at a very comfortable margin.
Another issue you're quite high on is Gilead Biosciences. They're big in HIV. Tell me why you like this bond.
I think relative to where pharmaceutical bonds trade, when you get into the biotech names, you have the ability to get into the more emerging areas where there's still growth opportunities going forward for a drug maker.
Now, you also like Humana. There's a lot of worries about the Supreme Court hearing the Obamacare issues and whether or not that's going to be repealed. Why do you want to get into an insurer like Humana right now with that on the horizon?
There's a fair amount of concession for taking on the risk of these certain policies that you mentioned. I think you look at a company like Humana, it's not that these risks are going to be unique just to them. There are things going to face the whole industry, and in our view, this is the name that will manage those risks best.
Now, you also like Telefonica. This is the Spanish telecom. Clearly, there's worry about Spain, so why do you want to own a Spanish bond right now?
Well, the truth is 75% of their business is not in Spain, and when you actually take a look at what the drivers of their earnings profile are going to be, it's not necessarily going to be that of Spanish-related business, but yet their bonds are being punished by the fact that they're domiciled in Spain, which we view as an opportunity.
And finally, if there was a sector that you would avoid in 2012, what would it be?
I think that at this time you have to still say the European banks. At this point in time, when you look back at the historical spread you get, it may look wide, but the risk is also an unprecedented territory for those credits.